Dan Ives from Wedbush Securities has come out with a note raising his price target on Tesla from $475 a share to $500 with a bull case of $700.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So the Tesla stock price targets keep coming in thick and fast. Let's move on from that. This time, an upgrade from Dan Ives at Wedbush Securities to $500 per share. This on the same day we're hearing new rumours that possibly Tesla may be considering opening a battery factory in Indonesia. For the record, I've been buying a little bit of Tesla stock today, just fractional shares. As I mentioned recently, I'm broke because I spent all my money on Tesla stock. Rip me, what are you going to do? And also just wanted to let you guys know that Tesla's earnings occurs this week, so I'll be streaming that live, so stay tuned. And with that said, let's get into the video. But first, hey guys, if you live in the US and would like up to 2 free stocks valued up to $1,600 each, use the link in the description to WeBull and deposit $100 in your account. Each of these stocks will be a minimum of $8 in value, so if you suck at math, that is a 16% ROI on $100. Not bad. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
Tesla is our company to watch right now. Why, you ask? Well, because it's earnings week for the electric automaker, and with the stock up 47% in the past 3 months, according to Yahoo Finance premium data, and as the stakes are very, very, very high coming into this earnings report for Tesla.
Very high.
Ah, shit, I think they're onto me.
Very, very, very high.
Very high. And Dan Ives from Wedbush Securities has come out with a note raising his price target on Tesla from $475 a share to $500 with a bull case of $700, maintaining a neutral rating.
It's quite fascinating that they've had a neutral rating on Tesla stock since 2019. Now, for those of you who aren't stock market experts who understand the terminology, a neutral rating on a stock basically means, whatever. Meanwhile, here's my entire stock purchase and sale transaction history for the last couple of years since November 2nd, 2017. In fact, I'll just scroll through this for you guys. I'm not a stock analyst, I don't give advice, of course, but actions speak louder than words, and we can see here that the only stock I've purchased since November 2017 has been Tesla. And I've been buying pretty regularly. So I guess in theory, if I was an analyst, I would have had a buy rating on the stock. I think that's the correct terminology. Interesting.
He states, for example, third quarter deliveries, those came in above expectations. He's expecting another strong bottom line for its latest quarter. In terms of overall unit demand, Ives is bullish that Tesla will be able to achieve in the ballpark of 500,000 units for the year, despite the COVID-19 backdrop. The big drivers being pent-up demand in China. He's also talking about pockets of strength within Europe remaining a linchpin. And to this point, he believes that margins will incrementally be higher on the Model 3 sold in China versus the US or Europe, and that this could really increase profitability in the next few years for Tesla.
There's actually 3 key forces driving, There's actually 3 key forces that are pushing Tesla's margins higher. Those are economies of scale, building locally, for example in China, localizing most of the supply chain, labor costs, materials costs lower, so that's also contributing, as Dan points out. And the third thing is that Tesla is consistently innovating in terms of their manufacturing techniques. We know about the gigacasting, the heat pump that's now the octave valve, and all sorts of other things as well. So these 3 forces are actually working together to keep driving Tesla's margins higher. Never mind the ever-growing software component as well, which is almost pure profit.
Especially because China is expected to represent about 40% or 40% plus of global sales for the company by early 2022. He also talks about the price cuts recently, which Tesla has put on some of its models in the US and also China. The macroeconomic picture improving in the next 6 to 12 months. Also, EV demand in China starting to accelerate. Really honing in on that China growth story. He's saying that that's worth at least $80 in a bull case to Tesla. And also talking, of course, about the innovations announced around Battery Day, the $25,000 vehicle that was announced that is supposed to come in the next 3 years. So very bullish on Tesla. Tesla year to date is up 428%.
Tesla stock up over 420% year to date. Music to my ears. You know what? I think they're right. Tesla stock is
very, very, very high.
Very high.
Tesla kicking off the trading week in high gear after analyst Daniel Ives from Wedbush Securities raised his target price on the stock to $500 from $475. That coming ahead of the company's third quarter earnings, which will be out on Wednesday after the closing bell. According to analysts, earnings are expected to come in something to the tune of 55 cents a share for the quarter, or $8.28 billion on the revenue side. So certainly a strong quarter expected for Tesla overall. That follows its announcement just a few weeks ago that the company produced a record 139,300 vehicles in the quarter. All of this prompting Ives and other analysts to take a closer look at Tesla and to see whether its stock price is actually reflective of where the company's earnings and sales projections are going. And from Ives' perspective, while he continues to hold a neutral rating on the stock, which has been in place since April 2019, he does believe that the stock price has further to run. And so he raised that one-year target price to 500 from 475. Now, other analysts not necessarily following suit entirely.
Shout out to JP Moron with their $75 Tesla stock price target. You guys are killing me. I mean, anyway, by the way, just to be clear, the reason I use ridicule and mockery is hopefully to cause enough of a reaction on the other end that people go, what a prick, what a fucking, hang on a minute, let me just check. Maybe he's got a point. Or just check. Oh, he does have a point. He's still a prick, but he has a point, actually. That's the whole idea behind that. I just want to make sure you guys understand there's method to my madness.
Some analysts are certainly looking at a very, very strong quarter for Tesla, despite the fact that there's an ongoing pandemic and despite the fact that really consumers are scaling back in terms of their purchases. Nonetheless, if they are buying cars, they do appear to be buying Teslas.
That is a major understatement, as the graphic on screen will indicate. And
certainly from an electric car maker perspective, Tesla remains far ahead in pole position compared to its rivals. Nonetheless, these expectations are that at least for the quarter, that things are going to be looking not bad, but not necessarily out of the ballpark. And so that's where Tesla's recent numbers that showed its actual cars coming off the assembly line, that was certainly greeted with enthusiasm. And also other analysts, including the likes of New Capital Securities, also just recently raising their one-year target price, but not necessarily adjusting their ratings on the stock just yet. There is still expectations that Tesla needs to prove more of what it can do in a more regular environment.
I'm not buying that. I mean, come on. The fact that we've had a peek behind the curtains and seen into the future during this pandemic tells us literally everything we need to know. Tesla has crazy demand, far more than any other automakers. There's huge interest in their products because they have so much value to offer consumers. Nothing comes close on value. You can't spend the same money and get better value than a Tesla, period. Consumers know this. They're selling every vehicle they make. We don't need to see a more regular environment to have any certainty around Tesla's future. We've just seen into the future because of the pandemic.
Also, in terms of what it plans to do with some of its upcoming batteries and how those may actually be rolled out over time. And of course, how it continues to ramp up production and what demand looks like. The company just last week announcing the second of two price cuts on the S model, which is something that has not been quite selling as well versus the Model Y and the Model 3, which are more efficiently priced.
I found it quite interesting this week to hear the reaction from people in the mainstream finance media and stock analysts, even retail investors and the general public, on how they reacted to Tesla's price cuts on the Model S. Many people coming from a bearish sort of perspective, thinking that it indicates a lack of demand and not really understanding that Tesla continues to drive their costs down and pass those cost savings on to consumers to automatically expand their market, because their mission is to accelerate the world's transition to sustainable energy. And that's what they're doing by making more people able to access their products over time. Duh. I suspect in the coming weeks and months, we're going to see analysts continue to upgrade Tesla stock and upgrade Tesla stock and upgrade Tesla stock over and over and over. Once they start to get really ahead of where the stock is and not just upgrading within 5 or 10% of where it is today, that point might indicate that Wall Street in general is really starting to see Tesla's inevitable future. But at this point in time, I really don't think Wall Street understands that next quarter is going to be a record, and then next quarter is going to be another record, and then next quarter is going to be another record ad infinitum. Stay tuned for the next analyst upgrade on Tesla stock very soon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and stake using the links below. Open a new WeBull account, deposit $100 and you'll get 2 free stocks valued up to $1,600. And stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.